Welcome to another Friday closing bell for the week ending 25th of September 2015. If you look back at last week, we were saying that the market was almost up 5.33 points, which is very significant from a weekly standpoint, and that's the best we ever seen so far. And let me show you what it means. You can see that was what we said. Let me just refresh this just to get the right chart in here. That was what we saw, but any attempt to push higher, market did try to close lower. So this may look like a 2-bar reversal, but I don't think it is because it didn't close the low of the last week. So which is still significant because we're still having a 5% run up and the market came back off, which is how do I say it? Likely to be assumed because all the bad news that we have, and that's about a bond junk status that we've been relegated to despite we have a AA3 rating. That's because of the ongoing political turmoil that we've been seeing so far, but market looking very, very poised. And let me tell you what it means. If you look from a daily chart here, you can see 1, 2, 3, 4, 5, and this was the day the market broke out, and because of the value cap and the market went out. That's good, a nice pullback in here, but you notice we are having a nice swing, 3-bar down. This is a change of guard, a very, very classic what we call a swing trade. It looks even better on the futures chart if you look at that one. That's a classic swing, 3-bar down, and there's a 2-bar reversal. So market likely to swing back up. And now let's look at the daily charts of a mid-cap stock. Another one, a small doji tail. That's very wonderful. This is something you want to see. Market pullback is holding above the 50-day moving average. And let's pay our attention in here. This one took up only 2 days. Finally, on the third day, closes below. And guess what? Next week is definitely, let me put a note here, to retest the so-called 1650 correspond to a 50-day moving average. That's going to be good. The fact that if we can break through, it will signify. Now, a lot of things has been said. The US FOMC, Janet Yellen did come in and talk about a likelihood of rate rise by year end. Now they have one chance more in October and December. I think it's coming. It's no way. And a little thing, I've talked to one of the research manager in KL, very prominent research manager, and he's saying that the rate rise will signify good things to come for the US economy, meaning job numbers are getting better, the economy are improving. That will mean higher stock market to come. At this stage of time, the theme has been reversed. No longer we want to see zero interest rate or no interest rate hike. We want to see some gradual interest rate hike, maybe 25%, 25 basis point going from here onwards, and that's what we want to see in here. Okay, so take note of that one. And the small cap stock, similar story in here, just tugging below the 50-day moving average around 14,845 in here. Significant will be breaking back to 1500. We have seen some stock like IFCA, which is a small cap stock, has done so too. So let's see whether that will be follow soon. Okay, let's go on to next thing is the foreign funds before we go to the FKLI. Now, foreign funds has been a real performer in end of last week. 3 weeks, for many weeks we haven't seen, except for 3 days, we have a conservative buying, closing up almost 771 million. But subsequently, the last 3 days we saw them selling, and that's why we saw this negative down market in here. Okay, so foreign funds is did buy, but they did sell off. But I think they're back. Next week they'll be back. Okay, on the future side, definitely good. This is what I mean. Volume came in, put a really convincing hold above the 1600, and also for the first time in our IVSA community, we noticed the discount has narrowed down between the futures and the cash market. That means market's turning bullish. So it's no surprise next week is going to go higher. So take note, market's turning bullish, not turning bearish. Okay, we have a change of guard that is from a swing pattern. Classic swing pattern is going to turn back up. So ladies and gentlemen, you heard it first on the closing bell with traderstruthreview.com. Now going here onwards, very bullish is also CPO, finally taken out 2, 3, 350. I haven't looked at the soybean oil, but that's going to tell you a little bit of El Nino and reduction in stockpile. Definitely it looks like the 2,400 level is one level they're going to be telling. Today market is up 4%, very, very significant, run very, very well. I have to say that. Now going to our neighbor Singapore has been really dredged. You could see market really, now let me see whether this has been broken down. It's been very, very so-called sideways moving in here. This is the one-eye Joe trade. We expect the market to sort of break out, but again Straits Times, which is a Singapore, does get a lot of motivation from the Shanghai market, as you know, many of the large cap stock are pegged into the Chinese economy. So that's why we don't see Shanghai doing well, and as a result we see STI, in this case Singapore, begin to retest 2800. We will look at the some of the charts later for the Shanghai market. Okay, so that's looking at the FKLY and CPO. Let's look at next let's look at the regional market. Firstly is definitely my pick will be the Shanghai market. Okay, let me just get the Shanghai market up for you. There you go. So let's get a refresh. This is what I'm talking about. The Shanghai market in here been moving sideways in here. A lot of stimulus has been put into place to prevent the stock rout of the Shanghai market. Even the presidency in lately in US is saying that, look, the worst may be over. We are looking for a breakup to the upside. No doubt we have what we call the this is what we call, let's look at it, the dead cross. But dead cross will happen if we don't see a sell-off breaking to 2,800. We will see this thing mark back up very, very soon. Mark my word for that. Same goes also for Hang Seng, which is actually taking a cue from the Shanghai market in here. But what's really positive is the Dow Jones. Now remember last time when I look at Dow Jones was down almost 220 points in here, managed to rescue up, and guess what, it's a doji tail. 1 2 3 4 5 doji tail, nice one in here. Looks for rebound tonight, ladies and gentlemen. If it should break the 15,900 level, that's going to be bad, but I don't think it's going to break. It's likely to retest back the 16.0 when more news about concrete of interest rate rise at 25 basis point, which is coming soon, either in October or December. That's what we are looking for. Okay, ladies and gentlemen, that's what we want to do that too. Australia also moving sideways. Can see in here tagging between 5,000 and 5,100 with the removal of the Tony Abbott and replaced by Malcolm Turnbull. That signifying a bit of the resistance that we can be taken out right in here. Again, the 50-day moving average coming in at 53.00 level in here. Nikkei, same thing too, sideways moving, Straits Time or sideways moving. What's really positive is we're looking at it is the doji, the doji tail, or we call it the spring from the Dow Jones chart. That is really something very positive in my opinion. Now let's look at the gold market in here. Definitely a jump yesterday in here. Now very interesting, if Janet 11 says that no interest rate rise, then they will say in December, how can gold go higher? So that's why I've been saying now gold has been very, very sort of manipulative move by all these central banks inside there. So it's no longer the safe haven. It's pretty much a move in play by the syndicates in here. And not so good is the weakening of ringgit up to 4.40. Where are we going? No, we have this point in here. It seems that we have uptrust, market came back off to 4.2, spring bar. It's a nice trend in here, double bottom in here around 420. That's going to be a level. If the market were to come back down 420, can it break below? I think the 4.5 may come very soon in here. Look at this. This is very nice trend, just like you see it in here. Break back up. We haven't seen any drastic. That is going to come from the political landscape, whether this will improve the ringgit as based to US dollar. Okay, now let's look at the which is the WIX. Okay, now WIX, remember, is the measurement of greed and fear measured by the put and call option, which is listed on the US Dow Jones. When the market was very bearish, when there's really a panic, market did hit the 53.29 that we've seen in here, right? And subsequently came back off. We do see a nice doji here, so that we might see market retest back to 25. Last week we were at 21.14. Today we are at 23.47. So that's a lot of still pose a bit of bearishness in the market in here. So tonight, judging from wicks, we might hover around the same point. I don't think Dow Jones is going to go up that much since we have a nice resistance built just now at this level. Let me just get here at 16200 level in there. Should able to hold above in here. The 50-day moving average is the one that we look at. You can see this upthrust, a beautiful one in here. Market tend to fall off from there onwards. Right, we done the wicks. We look at the gold just now. Now we will look at the stocks that we have last week. Again, looking at the KLCI, we do think we have seen the downside movement. Next week we will see a retest back to 1615 here if Dow Jones don't close below the bottoming tail, like we saw earlier here. And yes, weekly chart, we have a 5% breakup in here. A pullback does happen, but we didn't close that bad too. We didn't close below the 1600 level, so looking pretty good. Okay, looking pretty good. So that's all we have for our weekly closing bell for 25th of September. I'll see you next week. Bye.